Stock market plunges amid recession fears, Dow drops 611 points. The stock market experienced a sharp sell-off on Friday, driven by growing recession fears as weak hiring data and rising unemployment led investors to flee riskier assets. The Magnificent Seven stocks, which have been key drivers of the recent bull market, led the decline, with the Nasdaq 100 falling into correction territory. August is off to a rough start for equities as a series of disappointing labor market reports and mixed economic news have heightened concerns that the Federal Reserve may have delayed too long in lowering interest rates from their 23-year high. The unexpectedly weak July jobs report intensified these worries. According to the Bureau of Labor Statistics, U.S. non-farm payrolls increased by just 114,000 in July, significantly below economists' expectations of 175,000. Over the past year, the U.S. economy had been creating an average of 215,000 jobs per month. Additionally, June's job numbers were revised downward by 27,000 to 179,000. The unemployment rate, which is derived from a different survey, rose to 4.3% in July, up from 4.1% the previous month. This increase triggered the Sahm Rule, a recession indicator that has maintained a perfect track record over the past 50 years. Ian Shepherdson, chairman and chief economist at Pantheon Macroeconomics, commented on the situation, stating, "July's poor employment report leaves the Fed looking woefully behind the curve with its decision to hold rates this week. The outcome of September's meeting now hangs in the balance between a quarter-point and half-point rate cut." He attributed the weakness to the long-lagged effects of excessively tight monetary policy, rather than any one-time factors like weather. A weakening labor market has increased pressure on the Federal Reserve's Federal Open Market Committee (FOMC) to lower the short-term federal funds rate at its next meeting. As of August 2nd, futures traders saw an 80% chance of the FOMC enacting a half-point cut in September, up from 22% just a day earlier, according to the CME Group's FedWatch tool. Meanwhile, the odds of a quarter-point cut dropped from 78% to 20% over the same period. Risk assets are getting hammered on joblessness worries, and investors are no longer reacting favorably to negative economic developments, noted Jose Torres, senior economist at Interactive Brokers. By the close of trading, the Dow Jones Industrial Average had fallen by 611 points, or 1.5%, to 39,737. The Nasdaq Composite dropped 2.4% to 16,776, while the S&P 500 fell 1.8% to finish at 5,346. Stocks in focus. Earnings reports from major tech companies also influenced market sentiment. Mixed to disappointing results from some big tech names led investors to reassess their optimism about the potential profitability of generative AI investments in the near term.